Thanks for joining us today. We're going to talk earnings. It's been quite the earnings season, but before we do, Mike, how was your weekend?
Oh, it was great. It was great.
Yeah.
I got to hang out with you a lot.
Oh, it's always a good weekend when that happens. So there's a lot going on the earnings front. It's been historic, and we've talked about this in the past. But really, I think it's important for us to sort of dig into here what actually happened in this quarter of earnings, and then what we're looking for in the next coming quarters and years. Because I think the story as it unfolds is going to be a really big indicator of how the market evolves from here and how potentially the Fed reacts to what we potentially could be seeing. So let's first start with looking at the historic Q2 numbers so far.
Yeah, this chart right here, a record percentage of companies beating earnings. So 88% of companies that reported thus far during the Q2 earnings season have beaten earnings expectations. So that is a record. A similar percentage have beaten revenue expectations. And the aggregate beat on the earnings side has been 17%, which is near a record. And the aggregate beat on the revenue side is 5%, which is a record. So, everybody knew that Q2 2021 earnings were going to be lights out because think about what was happening 1 year ago, right? The economy was shut down, very easy year over year comps. But what we've been saying all along is there's a high probability that analysts just haven't fully priced in the impact of all the money that has been created over the past year, record levels of personal income, record levels of spending, GDP already back above pre-pandemic levels, interest rates near all-time lows. These are the things analysts still just cannot ratchet up their expectations high enough to what's actually happening.
Right. So you make a great point. So pre-pandemic levels versus earnings today, higher for sure, right?
Yeah, more than recovered on the earnings side and the revenue side.
So the easy comps being over, we would clearly see a deceleration from here, obviously, right?
Yeah, you definitely say Q2 is peak earnings growth, but that does not mean that we can't continue to grow earnings at a very fast clip from here on out, especially given that, in Q2 also record levels of net operating margins. So companies talking about things like labor shortages, cost pressures, all these things, we're at peak margins right now as well. So, you know, with economic growth still strong, so much money in the system, personal incomes near records, interest rates very low, companies are going to continue to be able to make money.
Yeah. And explain what that peak margins does for things like inflation.
Yeah. So when you have peak operating margins, you're basically extremely profitable. And what that can allow you to do as a company, if you need to expand capacity because there's very strong demand for whatever it is that you sell, you can do that. So you can increase productive capacity, which should put downward pressure on prices. The other thing is, if there are more cost pressures or labor cost pressures, you have room to potentially eat those if you wanted because your operating margins are so large. So it's a great cushion, a great buffer for companies to deal with the types of supply chain disruptions and labor shortages that we're seeing.
Yeah, cool. So let's look at the next slide at earnings growth expectations and how they've been changing. I mean, just for the quarter for 2021 and for the year.
Yeah. Yeah, I mean, we showed this chart at the beginning of the year, and at that point, the light blue bar, if you look for the S&P 500, the expectation was we'd get something like 20% earnings growth for calendar 2021, which was excellent. But those estimates have doubled, more than doubled over the first, 7 months of the year, 7.5 months of the year. So now the consensus for the full year is over 40%, um, which is just huge. And to think that we're getting a record number of companies beating right now, beating by near record margins, while analysts have been ratcheting up their expectations aggressively, is just even more impressive.
Absolutely. And taking a step out of this quarter into the coming quarters, how have the expectations been trending for the next few quarters and into the next few years?
Yes, very similar trajectory, especially when you think the back half of 2021. expecting over 20% earnings growth over the next 2 quarters to round out the year. That's how you get to over 40% earnings growth in the calendar year. And then you think, wow, we'll be sitting here the end of 2021 thinking very difficult year over year comps in 2022. Um, but even with that taken into consideration, the consensus now is next year potentially double digit earnings growth. So, you know, stocks, earnings yields going up, stocks growing into their valuations, and still seeing a lot of upside surprises. So, plenty of room to run here on the earnings side.
Right. And we're talking about estimates of next year around 9.5 and 23, 10.5. So these are double digit earnings growth numbers, which are fantastic for the stock market, and leads you to sort of our next slide, which is the TINA chart. Uh, right now, there's still no alternative to stocks. We're probably going to have more reason to buy stocks in the future.
Yeah. Yeah, and the way these lines work out, so each of these colored lines is the equity risk premium for different areas of the equity market, which is your earnings yield. So if you put $1 into the S&P 500, how much do you get back in earnings? Minus the 10-year Treasury yield. So let's just keep one of those constant and play out how these lines would play out. So when these lines are going up, it says stocks look attractive relative to the 10-year Treasury note, and they are moving up right now. Why are they moving up? Because you put $1 in to the S&P 500, you get way more earnings now than you did a year ago, and you factor that in over the next few quarters, next few years even. This earnings growth that we're seeing, these strong operating margins, they're going to continue to put upward pressure on earnings yields, and these lines are going to continue to go up. And we have our expectation is that longer term Treasury yields will move up through the end of the year, but nowhere near the pace that earnings yields are going to be moving up. And so you have this TINA effect. There is no alternative. I mean, stocks are looking increasingly attractive relative to bonds, and this entire earnings picture is saying that should continue.
And then you add to the fact that companies are starting to restart their buyback engines, so they'll be buying back more stock. This will just continue. So if the dominant narrative right now is we're in peak earnings and we're sitting at all-time highs, I think we set a new all-time high last week again.
Mhm.
What does that portend for us so going forward if sort of the top is priced in, but we think it's just a minor trough before we accelerate again?
Yeah, I mean, you can definitely make a case that the easy money has been made, and a lot of this earnings recovery now is priced in. The year over year comps, everybody knew they were going to be messy coming out of the pandemic. So they should have more visibility into earnings now, which
Yeah.
in a way should bid up how much you're willing to pay for equities if you feel like equities are less risky because the earnings visibility is there. The other thing to think about is we're just talking about the peak in earnings growth because 1 year ago was the pandemic. Earnings are going to continue to grow from these levels. And then the last thing is, there's a narrative that perhaps this is all priced in, and there are a number of things suggesting that that's not the case. I mean, companies during Q2 that had a positive earnings surprise, they saw their stock price jump much higher than they normally would in an earnings season if they beat on earnings. And companies that had a negative surprise, their stocks were punished far less than what you would see normally. So that suggests that this isn't all priced in. Companies are still getting rewarded and they're still beating. And then the other factor is you can take the bottom up price estimates for all of the companies in the S&P 500 aggregated across all the analysts that follow them, and that suggests something like 5,000 S&P 500 price target by the end of the year. So once again suggesting this isn't all priced in.
Right.
um,
That's a long way from here, right?
exactly.
And so all this great news on the earnings front on the corporate side, what is that and the potential for double digit earnings growth the next 2 years? What does that tell the Fed in terms of tapering, interest rates, that type of thing?
Yeah, if earnings can continue to grow as folks are thinking, the Fed would probably look at that and say, on the margin, if that results in better employment figures and wage gains, then perhaps that could increase the pace of things like tapering asset purchases and maybe hiking interest rates, because employment is the one side of the Fed's mandate, or their stated mandate at least. Then the other side of the Fed's mandate would be, stable prices, inflation. And so to the extent that all of these earnings and strong profit margins result in companies increasing production, that should have downward pressure on inflation or be disinflationary. So these things should be roughly balanced. I mean, there's going to be ways that the Fed can look at this and say, this is good news that doesn't really have any negative consequences, and so I shouldn't feel compelled to, take the punch bowl away any sooner than I previously thought.
Right. And I guess the other sort of underlying issue that we've talked about internally is this is all happening while the Delta variant is sort of raging through the economy. So as that starts to wane off, we could see even a further acceleration. And we're seeing that from some of the upgrades and earnings revisions that we're seeing being made now. So I think you just have to keep your eye on it. From our perspective, there's a lot going on, and it seems very positive.
Yep.
So there's a lot of great news here, but we always have to sort of figure out what things could derail this picture. And one is the tax increases that are being proposed and what that impact might have on corporate profits going forward. So let's talk to the viewers quickly about what's being proposed and how that might impact the earnings estimates going forward.
Yeah, if you look at different scenarios and you look at something like a 25% headline corporate tax rate with, 18% tax rate on multinational income, if that were to go into effect next year, then the current consensus earnings growth for 2022 of, somewhere around 10%, that would probably come down to somewhere near 3-4%. So it is impactful. It definitely will impact different industries and different sectors differently, particularly the multinational income tax. So that's probably the biggest known unknown that could change this outlook.
And it's also midterms next year. So, let's handicap the likelihood here. What do you think in terms of the likelihood that passing?
Yeah, anything related to tax increases would have to go through the budget reconciliation process, which would mean the Democrats would have to kind of go at it alone, and they would have to get every single vote. Um, and there are plenty of moderate Democrats that are up for election in midterms that may feel compelled to not support something like that. Maybe now's not the time. So similar to discussions we had previously, um, we think the larger social spending bill accompanied with tax increases, it seems like a relatively low probability. It's certainly not a sure thing that would actually make its way through a Democrat-led Congress next year.
Yeah. There's a lot of lobbying going on right now,
Yeah.
especially on the Democratic side to prevent these things from going through. So more to be seen here. And thanks for watching today, and we'll look forward to future updates on earnings.